The report contains shocking statistics and trends of frauds for the second quarter of 2010 and warned that the vice propagated by staff and customers could result in a crisis of confidence and, in the long run, the collapse of institutions that are most exposed. The report by Banking Fraud Investigation Department, an arm of the central bank, lists bank transfers as the most prone to incidences of fraud, with bank losing nearly 270 million shillings between April and June this year. Real-time gross settlement, or RTGS, the prompt settlement of transaction amounts in excess of 1 million shillings that was introduced in October 2009, as posing as the biggest challenge for commercial banks. Embezzlement comes in second, draining more than 45 million shillings from banks, followed by card fraud, which costs 31.14 million. Then comes checks fraud, loan fraud, forgery and identity theft. The total amount lost over the 3 months period came in at 390.3 million shillings. Out of 321 million shillings was directly stolen by bank staff members. During the first quarter of the year, 371.1 million shillings had been lost fraudulently, bringing the total for the first half of the year to 761.4 million shillings. The banking fraud investigation discovered a unique type of ATM card fraud where bank staff in a commercial bank colluded with customers who applied for 2 ATM cards, with both cards being linked to a target account within the same bank. The customers used their cards and withdrew money through the ATM machines, and the target accounts were debited. The bank in question lost 31 million shillings in only 4 days. In one of the larger banks, the report observes that recruitment is riddled with nepotism, which makes it easier for staff to collude with fraudsters and pose challenges for investigators. The department also noted that after suspects have been taken to court, the complainants, who are mainly commercial banks, were in habit of engaging with negotiations with a suspect, after which they write to the department asking the court to withdraw the cases. The department also noted with great concern that there lacks adequate cybercrime legislation in the country. The report revealed that some magistrates and prosecutors do not understand the mechanism of committing some of the complex frauds. The department said it was currently investigating a case by Safaricom's M-Pesa services in which fraudsters have been making deposits in unsuspecting agents using fake currencies. One of the interesting findings in the report is that it took only 24 staff members in various banks to steal 400 million shillings in just 3 months, strongly suggesting that there is a direct link between uncompetitive recruitment and fraud in banks. Cynthia Nyamai, KTN Business Today.